Question 1. Title searches and examinations. Jane is a title examiner tasked with reviewing the chain of title for a property located in Delaware. During her review, she discovers that a prior owner's deed was not recorded in the public records. This missing deed pertains to a transfer of ownership that occurred over 20 years ago. What potential title issue could arise from this discovery, and what steps should Jane take to address it? A. The title issue is a cloud on the title due to the unrecorded deed. Jane should prepare a corrective deed to address this issue. B. The title issue is a break in the chain of title. Jane should file a quiet title action to resolve the defect. C. The title issue is a tax lien from the previous owner. Jane should confirm that the property taxes are current before proceeding. D. The title issue is adverse possession. Jane should verify if any new claims to ownership have been made by others. Answer. B. The title issue is a break in the chain of title. Jane should file a quiet title action to resolve the defect. Explanation. In title insurance, a break in the chain of title refers to gaps or missing links in the documented history of property ownership. An unrecorded deed can create such a break, making it unclear whether the current owner has clear title. To address this, a quiet title action is often necessary. This legal process helps to establish clear ownership by resolving any disputes or claims related to the property's title. Jane should ensure that all previous transactions are correctly recorded or addressed through legal means to prevent potential future disputes. Question 2. Title insurance policies. Which of the following is a primary difference between a standard title insurance policy and an extended coverage policy? A. A standard policy covers only recorded matters, while an extended policy also covers certain unrecorded matters such as zoning violations. B. A standard policy provides coverage for boundary disputes, while an extended policy excludes such coverage. C. An extended policy covers only lenders' interests, while a standard policy covers both owners' and lenders' interests. D. A standard policy includes coverage for environmental hazards, while an extended policy does not. Answer. A. A standard policy covers only recorded matters, while an extended policy also covers certain unrecorded matters such as zoning violations. Explanation. The main distinction between standard and extended coverage title insurance policies lies in the scope of coverage. A standard policy typically covers only those issues that are recorded in public records, such as mortgages and liens. In contrast, an extended coverage policy offers broader protection, including some unrecorded matters like zoning violations or certain encroachments. This broader coverage is advantageous for protecting against issues that may not be apparent from the public record alone. Question 3. Scenario-based question. Mr. Thompson recently purchased a property and obtained title insurance through a lender's policy. Shortly after closing, he discovers that a portion of the property is subject to an easement that was not disclosed prior to the sale. The easement allows access to a neighboring property and could impact Mr. Thompson's use of his land. What should Mr. Thompson do in this situation? A. Mr. Thompson should file a claim with his title insurance company, as easements that were not disclosed are typically covered by a lender's title policy. B. Mr. Thompson should contact the seller directly to resolve the issue, as it is their responsibility to disclose all property rights. C. Mr. Thompson should negotiate with the neighboring property owner to limit the use of the easement, as the title insurance policy does not cover such disputes. D. Mr. Thompson should conduct a new title search to verify if the easement was properly recorded and then file a complaint with the local real estate commission. Answer. A. Mr. Thompson should file a claim with his title insurance company, as easements that were not disclosed are typically covered by a lender's title policy. Explanation. In the context of title insurance, lenders' policies generally provide coverage for certain undisclosed issues that affect the title after closing. An easement that was not disclosed can be a significant issue, as it may affect the property's value or use. Mr. Thompson should file a claim with his title insurance company to address the undisclosed easement. The title insurance company will investigate the claim and may provide remedies such as financial compensation or legal defense against the easement's impact. It is essential to address such issues promptly to protect the property's value and usage rights. Question 4. Real property law and legal concepts. In a real estate transaction, what is the significance of the statute of frauds in relation to property transactions in Delaware? A. The statute of frauds requires all property transactions to be conducted in writing and does not recognize verbal agreements. B. The statute of frauds allows verbal agreements for property sales as long as they are subsequently recorded in public records. C. The statute of frauds mandates that all property transactions be conducted with a notary public to be legally binding. D. The statute of frauds provides a 30-day period for property transactions to be finalized before requiring written documentation. Answer A. The statute of frauds requires all property transactions to be conducted in writing and does not recognize verbal agreements. Explanation. The statute of frauds is a legal principle that requires certain types of contracts, including those related to the sale or transfer of real property, to be in writing to be enforceable. This means that verbal agreements for property transactions are not legally binding unless they are documented in a written contract. This requirement helps ensure clarity and prevent disputes over the terms of property transactions. In Delaware, as in many other jurisdictions, the statute of frauds is a fundamental aspect of real estate law. Question 5. Title commitments. Which section of a title commitment typically lists exceptions to the coverage, such as easements, restrictions, or other encumbrances? A. Schedule A. B. Schedule B. C. Schedule C. D. Schedule D. Answer. B. Schedule B. Explanation. In a title commitment, Schedule B lists exceptions to the coverage provided by the title insurance policy. These exceptions can include easements, restrictions, encumbrances, or other matters that affect the property but are not covered by the policy. Schedule A generally includes the basic information about the property and the parties involved, while other schedules may provide additional details or conditions. Understanding Schedule B is crucial for identifying potential issues that could impact the property's title. Question 6. Title insurance regulations and compliance. How does the Dodd-Frank Act impact title insurance companies in terms of consumer protection? A. The Dodd-Frank Act requires title insurance companies to disclose their profit margins to consumers. B. The Dodd-Frank Act mandates that title insurance companies implement risk management practices to protect consumers from fraud. C. The Dodd-Frank Act establishes rules for the disclosure of settlement service charges and prohibits kickbacks to real estate professionals. D. The Dodd-Frank Act limits the amount of coverage title insurance companies can offer to consumers. Answer. C. The Dodd-Frank Act establishes rules for the disclosure of settlement service charges and prohibits kickbacks to real estate professionals. Explanation. The Dodd-Frank Act, enacted in response to the 2008 financial crisis, includes provisions that affect title insurance companies by regulating settlement service charges and prohibiting kickbacks. These rules are designed to increase transparency in real estate transactions and prevent conflicts of interest that could harm consumers. By requiring clear disclosure of charges and banning improper financial incentives, the Act aims to protect consumers and ensure fair practices in the real estate market. Question 7. Title insurance underwriting. What is a key factor that title insurance underwriters consider when assessing risk for a commercial property? A. The aesthetic value of the property's design. B. The environmental impact and zoning compliance of the property. C. The historical value of the property and its previous ownership. D. The cost of the property's construction materials. Answer. B. The environmental impact and zoning compliance of the property. Explanation. When underwriting title insurance for commercial properties, underwriters closely examine factors such as environmental impact and zoning compliance. These aspects are crucial for assessing potential risks that could affect the property's value or use. Zoning compliance ensures that the property is used according to local regulations, while environmental impact addresses potential issues such as contamination that could affect the property's desirability or legal status. Proper evaluation of these factors helps underwriters determine the appropriate level of coverage and identify any risks that need to be addressed. Question 8. Title searches and examinations. During a title search, what is a common issue that can arise from a missing mortgage discharge, and how can it be resolved? A. The issue is a potential claim of ownership by a previous lender. It can be resolved by obtaining a new mortgage discharge from the previous lender. B. The issue is a gap in the chain of title. It can be resolved by preparing a corrective deed to address the missing mortgage discharge. C. The issue is a tax lien from the previous owner. It can be resolved by paying off the outstanding tax lien. D. The issue is an unrecorded easement. It can be resolved by recording the easement in the public records. Answer A. The issue is a potential claim of ownership by a previous lender. It can be resolved by obtaining a new mortgage discharge from the previous lender. Explanation. A missing mortgage discharge can create a potential issue where a previous lender might claim an interest in the property due to an outstanding mortgage. To resolve this, it is necessary to obtain a new mortgage discharge from the previous lender, which confirms that the mortgage has been paid off and no further claims can be made. This ensures that the title is clear and free of any encumbrances related to the old mortgage. Question 9. Title insurance policies. What does an ALTA, American Land Title Association, policy endorsement typically provide, and why might it be used? A. It provides additional coverage for environmental hazards that are not included in the standard policy. B. It modifies the standard policy to include coverage for specific risks or issues related to the property. C. It limits the coverage of the standard policy to only recorded matters. D. It cancels any exceptions listed in Schedule B of the title commitment. Answer. B. It modifies the standard policy to include coverage for specific risks or issues related to the property. Explanation. ALTA policy endorsements are used to modify standard title insurance policies to include coverage for specific risks or issues related to a property. These endorsements can address particular concerns such as zoning compliance, access rights, or other unique aspects of the property that are not covered by the standard policy. By tailoring coverage through endorsements, the policy can better meet the needs of the insured party and address specific risks associated with the property. Question 10. Ethics and professional responsibility. What ethical principle should a title insurance professional adhere to when handling confidential information? A. They should share confidential information with colleagues to ensure accurate documentation. B. They should ensure that all confidential information is protected from unauthorized access and only disclosed as necessary. C. They should make confidential information available to clients upon request, regardless of their involvement in the transaction. D. They should disclose confidential information to regulatory authorities if requested for auditing purposes. Answer. B. They should ensure that all confidential information is protected from unauthorized access and only disclosed as necessary. Explanation. Title insurance professionals must adhere to ethical principles that protect confidential information from unauthorized access. This involves safeguarding sensitive details related to transactions and clients and only disclosing such information when absolutely necessary, such as to authorized parties involved in the transaction or as required by law. Ensuring confidentiality is crucial for maintaining trust and compliance with privacy laws and regulations. Question 11. Specialized areas in title insurance. When insuring a newly constructed residential property, what unique consideration must be taken into account compared to existing properties? A. The title insurance policy must cover any future construction defects discovered after the policy is issued. B. The policy must address any potential liens from subcontractors or suppliers involved in the construction. C. The title policy must provide coverage for environmental hazards discovered during the construction phase. D. The policy must include coverage for zoning changes that could affect the property after construction. Answer. B. The policy must address any potential liens from subcontractors or suppliers involved in the construction. Explanation. When insuring a newly constructed residential property, one unique consideration is the potential for liens from subcontractors or suppliers who worked on the construction. These liens can arise if payments were not made for construction services or materials, and they could affect the property's title. Title insurance for new construction must address these potential liens to ensure that the property is free from encumbrances related to unpaid construction debts. Question 12. Fundamentals of title insurance. What is the primary difference between an owner's title insurance policy and a lender's title insurance policy? A. An owner's policy covers only the lender's interests, while a lender's policy covers the owner's interests. B. An owner's policy provides coverage for the full value of the property, while a lender's policy covers only the loan amount. C. An owner's policy is transferable to new owners, while a lender's policy is non-transferable. D. An owner's policy is required by law, while a lender's policy is optional. Answer. B. An owner's policy provides coverage for the full value of the property, while a lender's policy covers only the loan amount. Explanation. The primary difference between an owner's title insurance policy and a lender's title insurance policy is the coverage amount. An owner's policy covers the full value of the property, protecting the owner's equity from title defects that could affect ownership. In contrast, a lender's policy covers only the amount of the mortgage loan, protecting the lender's investment in case of title defects that could affect the loan's security. Both policies protect against different risks, with the owner's policy offering broader coverage. Question 13. Title searches and examinations. When reviewing a chain of title, what issue might arise from an unrecorded deed and how should it be addressed? A. The issue is that the property may have been sold twice. It can be addressed by verifying the validity of the deed through a court order. B. The issue is that the deed may not be legally binding. It can be addressed by recording the deed to establish its validity. C. The issue is that the deed may have been lost. It can be addressed by obtaining a copy of the deed from the previous owner. D. The issue is that the property may have an outstanding mortgage. It can be addressed by ensuring that all mortgages are recorded. Answer: B. The issue is that the deed may not be legally binding. It can be addressed by recording the deed to establish its validity. Explanation: an unrecorded deed can create significant issues in the chain of title as it may not be legally binding or recognized against subsequent purchasers or encumbrances. To address this issue, the deed should be recorded with the appropriate government office, such as the County Recorder's Office, to establish its validity and ensure that it is legally recognized as part of the property's title. This helps to prevent future disputes and confirms the property's ownership history. Question 14. Title insurance policies. Which of the following is typically NOT covered under a standard title insurance policy? A. Forgery or fraud affecting the title. B. Unrecorded liens or claims against the property. C. Errors or omissions in public records. D. Zoning issues or land use restrictions. Answer: D. Zoning issues or land use restrictions. Explanation: a standard title insurance policy typically does not cover zoning issues or land use restrictions, which are considered outside the scope of title insurance coverage. Zoning issues and land use restrictions affect how a property can be used and are generally addressed separately from title insurance. Standard policies do cover other risks such as forgery, unrecorded liens, and errors in public records, which can directly impact the property's ownership and title. Question 15. Title insurance regulations and compliance. How does RE SPA, Real Estate Settlement Procedures Act, impact the role of title insurance companies in real estate transactions? A. RE SPA requires title insurance companies to provide a detailed breakdown of settlement costs and prohibits kickbacks between service providers. B. RE SPA mandates that title insurance companies offer discounts for bulk purchases of insurance policies. C. RE SPA allows title insurance companies to choose their own settlement procedures without federal oversight. D. RE SPA exempts title insurance companies from state regulations and standards. Answer A. RE SPA requires title insurance companies to provide a detailed breakdown of settlement costs and prohibits kickbacks between service providers. Explanation: RE SPA regulates the practices of title insurance companies by requiring them to provide a detailed breakdown of settlement costs, which helps ensure transparency in real estate transactions. Additionally, RE SPA prohibits kickbacks and referral fees between service providers, including title insurance companies, to prevent conflicts of interest and protect consumers from inflated costs. Compliance with RE SPA is essential for maintaining fair practices in the settlement process. Question 16. Title insurance underwriting. What is a key consideration for an underwriter when evaluating title risks for a property with a prior foreclosure? A. The underwriter must assess the impact of the foreclosure on the current title and verify that all prior liens and claims have been resolved. B. The underwriter must consider the previous owner's credit score and its impact on the current title. C. The underwriter must evaluate the aesthetic condition of the property to determine coverage. D. The underwriter must account for the property's location and its impact on market value. Answer A. The underwriter must assess the impact of the foreclosure on the current title and verify that all prior liens and claims have been resolved. Explanation: when evaluating title risks for a property with a prior foreclosure, the underwriter must carefully assess the impact of the foreclosure on the current title. This includes verifying that any prior liens or claims related to the foreclosure have been resolved and that the title is clear of any encumbrances that could affect the new owner. Ensuring that the title is free from past issues is crucial for providing accurate coverage and protecting the interests of the insured party. Question 17. Closing and settlement procedures. What role does a closing protection letter (CPL) play in a real estate transaction involving title insurance? A. A CPL protects the lender from errors or omissions by the title agent during the closing process. B. A CPL guarantees that the property will be free from all title defects after closing. C. A CPL serves as a legal document to finalize the transfer of ownership of the property. D. A CPL provides insurance coverage for environmental hazards discovered post-closing. Answer A. A CPL protects the lender from errors or omissions by the title agent during the closing process. Explanation. A closing protection letter (CPL) is a document provided by the title insurance company that protects the lender from errors or omissions made by the title agent during the closing process. The CPL ensures that the lender's interests are safeguarded against potential issues that may arise from mistakes or fraudulent activities by the closing agent. It does not cover title defects or environmental hazards, but provides an additional layer of protection for the lender's investment. Question 18. Real property law and legal concepts. What is the primary purpose of an easement in real property law, and how does it affect the property owner's rights? A. An easement allows the easement holder to use the property for specific purposes while the property owner retains ownership and control. B. An easement grants the property owner exclusive rights to a portion of neighboring property. C. An easement transfers full ownership of a portion of the property to another party. D. An easement eliminates the property owner's rights to make any modifications to the property. Answer A. An easement allows the easement holder to use the property for specific purposes while the property owner retains ownership and control. Explanation. An easement is a legal right that allows an individual or entity to use a portion of another person's property for a specific purpose, such as access or utility maintenance, while the property owner retains ownership and control. Easements do not transfer ownership of the property but grant certain usage rights that can affect how the property owner can use or modify their land. Understanding easements is essential for determining property rights and potential impacts on property value and use. Question 19. Title searches and examinations. What is the purpose of an abstract of title in the title examination process? A. To provide a summary of the property's history, including ownership, liens, and encumbrances. B. To create a new legal description for the property based on recent surveys. C. To verify the accuracy of public records and their impact on the property's value. D. To establish the current market value of the property for insurance purposes. Answer A. To provide a summary of the property's history, including ownership, liens, and encumbrances. Explanation. An abstract of title is a summary document that outlines the property's history, including details about past ownership, liens, encumbrances, and other significant events affecting the title. It helps title examiners and other parties involved in a real estate transaction understand the property's title history and identify any issues that need to be addressed. The abstract of title is crucial for ensuring that the title is clear and marketable. Question 20. Title insurance underwriting. When assessing title risks for a property with multiple heirs, what should the underwriter be most concerned about? A. Ensuring that all heirs have agreed to sell their shares and that their interests are properly conveyed. B. Determining the aesthetic condition of the property and its impact on the title. C. Verifying the historical value of the property and its impact on the underwriting decision. D. Evaluating the current market conditions and their effect on the property's value. Answer A. Ensuring that all heirs have agreed to sell their shares and that their interests are properly conveyed. Explanation. When dealing with a property that has multiple heirs, the underwriter's primary concern should be ensuring that all heirs have agreed to sell their shares and that their interests are properly conveyed. This is crucial because if any heir has not agreed to the transaction or if their interests are not clearly conveyed in the title documents, it could result in disputes or legal challenges after the transaction is completed. This issue can lead to potential title defects, which might affect the validity of the title and the title insurance coverage. Proper conveyance involves obtaining necessary legal documents from all heirs, such as quitclaim deeds or other forms of conveyance, to ensure that the title is clear and marketable. This helps to avoid future claims or disputes regarding ownership and protects the interests of both the buyer and the lender. Question 21. Specialized areas in title insurance. In title insurance for new construction, what is a common concern that is different from insuring an existing property? A. Ensuring that the property is free from any zoning violations or land use restrictions. B. Verifying that the construction is completed according to local building codes and regulations. C. Confirming that there are no environmental hazards on the property. D. Ensuring that all previous owners have cleared their claims on the property. Answer B. Verifying that the construction is completed according to local building codes and regulations. Explanation. In title insurance for new construction, a common concern is verifying that the construction is completed according to local building codes and regulations. This is because title insurance for new construction involves ensuring that the property not only has clear ownership, but also that it meets all legal and regulatory requirements for construction. This helps to avoid issues such as violations of building codes, which could affect the property's title and value. Question 22. Title insurance regulations and compliance. What is the role of ALTA, American Land Title Association standards in the title insurance industry? ALTA standards provide guidelines for the ethical conduct of title insurance professionals and help ensure consistency in title insurance practices. B. ALTA standards establish the required premiums for title insurance policies. C. ALTA standards regulate the interest rates that title insurance companies can charge for their services. D. ALTA standards set out the procedures for handling and dispersing settlement funds. Answer A. ALTA standards provide guidelines for the ethical conduct of title insurance professionals and help ensure consistency in title insurance practices. Explanation. ALTA, American Land Title Association standards play a crucial role in the title insurance industry by providing guidelines for the ethical conduct of title insurance professionals and ensuring consistency in title insurance practices. These standards help maintain high levels of professionalism and reliability within the industry, covering aspects such as policy coverage, underwriting practices, and customer service. They do not, however, regulate premiums, interest rates, or specific settlement fund procedures. Question 23. Real property law and legal concepts. What is the legal concept of adverse possession and how does it impact property ownership? Adverse possession allows an individual to claim ownership of property through continuous and open use without the consent of the original owner. B. Adverse possession permits an individual to acquire property through inheritance from a deceased relative. C. Adverse possession enables a property owner to transfer ownership rights to another party under a legal contract. D. Adverse possession allows an individual to acquire property by paying off the outstanding mortgage balance. Answer A. Adverse possession allows an individual to claim ownership of property through continuous and open use without the consent of the original owner. Explanation. Adverse possession is a legal concept that allows an individual to claim ownership of property through continuous and open use over a specified period despite not having the consent of the original owner. This concept is based on the idea that long-term, visible, and uninterrupted use of property can eventually lead to legal ownership. The requirements for adverse possession, such as the duration of use and the nature of possession, vary by jurisdiction, but generally include criteria such as continuous possession, openness, and exclusivity. Question 24. Title insurance policies. Which of the following statements accurately describes the coverage provided by an extended coverage title insurance policy compared to a standard coverage policy? A. An extended coverage policy includes additional protection against certain risks not covered by a standard policy, such as encroachments and zoning issues. B. An extended coverage policy offers less protection than a standard policy, focusing primarily on lender-related risks. C. An extended coverage policy only covers claims related to past ownership disputes, whereas a standard policy covers all potential risks. D. An extended coverage policy is limited to protecting against defects that occur after the policy is issued. Answer A. An extended coverage policy includes additional protection against certain risks not covered by a standard policy, such as encroachments and zoning issues. Explanation. An extended coverage title insurance policy provides broader protection compared to a standard coverage policy. It includes additional protection against specific risks such as encroachments, e.g., structures or improvements that cross property boundaries, and zoning issues which are not typically covered by a standard policy. Extended coverage is designed to address a wider range of potential issues that may affect the property's title and value. Question 25. Title searches and examinations. What is the significance of the chain of title, ECA title search, and how does it affect the title examination process? A. The chain of title provides a chronological history of ownership, which helps to identify any gaps or issues that may affect the current title. B. The chain of title details the property's current market value and its impact on the title. C. The chain of title summarizes the property's compliance with environmental regulations and zoning laws. D. The chain of title outlines the property's construction history and compliance with building codes. Answer A. The chain of title provides a chronological history of ownership, which helps to identify any gaps or issues that may affect the current title. Explanation. The chain of title is a chronological history of all previous ownership transfers and encumbrances on the property. It is essential for identifying any gaps, defects, or issues that may affect the current title. By reviewing the chain of title, title examiners can detect potential problems such as missing deeds, unresolved claims, or legal disputes that could impact the property's marketability and ownership rights. Question 26. Claims handling in title insurance. What is a common process for resolving a title insurance claim involving undisclosed heirs? A. The claim is resolved by negotiating a settlement with the undisclosed heirs and updating the title documents. B. The claim is resolved by voiding the existing policy and issuing a new one without addressing the undisclosed heirs. C. The claim is resolved by transferring the ownership of the property to the undisclosed heirs and removing all previous claims. D. The claim is resolved by cancelling the property sale and refunding the purchase price to the buyer. Answer A. The claim is resolved by negotiating a settlement with the undisclosed heirs and updating the title documents. Explanation. When dealing with a title insurance claim involving undisclosed heirs, the common process involves negotiating a settlement with the undisclosed heirs to address their claims. This typically includes updating the title documents to reflect any new ownership interests and resolving any legal disputes. The goal is to ensure that all rightful heirs are accounted for and that the title is clear and marketable moving forward. Question 27. Title insurance underwriting. In title insurance underwriting for a commercial property, what is a significant factor that differs from underwriting residential properties? A. The presence of more complex property use restrictions and legal agreements specific to commercial transactions. B. The evaluation of the property's aesthetic condition and its impact on underwriting decisions. C. The consideration of the property's historical value and its effect on marketability. D. The determination of the property's environmental hazards and their impact on title insurance coverage. Answer A. The presence of more complex property use restrictions and legal agreements specific to commercial transactions. Explanation. Underwriting for commercial properties involves more complex property use restrictions and legal agreements compared to residential properties. Commercial transactions often include detailed lease agreements, easements, and zoning regulations that need to be carefully reviewed and evaluated. These factors can impact the property's title and insurance coverage, making the underwriting process more intricate. Question 28. Title insurance policies. What is typically excluded from coverage in a standard title insurance policy that may be included in an extended coverage policy? A. Risks related to encroachments and certain zoning issues. B. Claims arising from fraud or forgery. C. Liens that were recorded but not yet satisfied. D. Issues related to public record errors. Answer A. Risks related to encroachments and certain zoning issues. Explanation. Standard title insurance policies typically exclude risks related to encroachments, e.g., structures that cross property lines, and certain zoning issues, which are often covered under an extended coverage policy. Extended coverage policies provide broader protection, addressing additional risks that are not included in standard coverage, ensuring more comprehensive protection for the insured party. Question 29. Title insurance regulations and compliance. What does the Dodd-Frank Act require from title insurance companies in terms of consumer protection? Options A. The Dodd-Frank Act requires title insurance companies to provide clear and transparent disclosures of settlement costs and practices. B. The Dodd-Frank Act mandates that title insurance companies offer discounts on premiums based on consumer income levels. C. The Dodd-Frank Act exempts title insurance companies from federal regulation of settlement practices. D. The Dodd-Frank Act requires title insurance companies to reduce their fees by a specified percentage. Answer A. The Dodd-Frank Act requires title insurance companies to provide clear and transparent disclosures of settlement costs and practices. Explanation. The Dodd-Frank Wall Street Reform and Consumer Protection Act requires title insurance companies to provide clear and transparent disclosures of settlement costs and practices. This regulation is part of a broader effort to enhance consumer protection and transparency in the financial industry. The Act aims to ensure that consumers are well informed about the costs associated with real estate transactions and title insurance, helping them make better decisions and reducing the risk of hidden or unexpected fees. Question 30. Real property law and legal concepts. When a property has an easement for utility access, how does it affect the property owner's rights and the title? Options A. The property owner retains full control over the entire property and the easement has no impact on their rights or title. B. The easement grants utility companies the right to access a portion of the property, potentially limiting the owner's use of that part of the property. C. The easement automatically increases the property's market value due to the added utility access. D. The easement is a temporary right that expires after a certain period, with no long-term impact on the title or property rights. Answer: B. The easement grants utility companies the right to access a portion of the property, potentially limiting the owner's use of that part of the property. Explanation: an easement for utility access allows utility companies to use a specific portion of the property for maintenance or installation of utility services such as water, electricity, or gas. This easement can limit the property owner's ability to use or develop that portion of the property, as the utility company has legal rights to access and use it. The easement is typically recorded in the public records and affects the title by establishing a permanent right over a specific area of the property. The presence of an easement must be disclosed to potential buyers, as it can impact property use and value.